right now, the reason why the market is reacting relatively calmly is that at this point, it doesn't look like it's going to be a major threat to, say, the major financial institutions. Nobody's threatening the New York Stock Exchange or the Chicago Merc Exchange. The threats have been really basically political and not economic. And I think that's why the market right now is still up, because it's reacting more to what it will react to, like Biden saying that stimulus will be added to, possibly more than once. Actually, England, the Bank of England, is talking about going negative in the rates. And even though our yields have gone up in the United States, nobody expects the Fed to really rock the boat and start raising rates, at least not yet. So the market is happy about that. We have earnings seasons going on this week. I think the expectations are low, so if they exceed expectations, that'll be another boost, particularly to the bank stocks they start reporting this week. So all of this has superseded what's going on politically. And with that said, what I always like to do is remind people is not to be too judgmental based on what's going on around you. And really focus on what's going on in the market. I find that watching too much media can really screw with your head, and I try to avoid it. I watch Twitter, I see headlines, but in terms of really doing a deep dive, yeah, it could depress you and make you not think clearly. So unless we really see this balloon to an out of control situation, where I think right now the expectations is that they're expecting unrest, but it to be controlled by the FBI, the National Guard, et cetera, I would just keep my eye on the fact that the market thinks the economy is going to recover, and that's all there is. People do not realize that every market, especially markets that get so publicly hyped up, will have volatility. And the cryptocurrency was still up almost 400% since April. So the fact that it has a 20-30% correction overnight is certainly disconcerting to people who've been buying it high. But this is really where it behooves people to learn the simple rules of trading. Buy low, sell high, take a profit, have risk points, and then wait for corrections, and that's where you get back in. And actually, I was kind of thinking once it got close to 30,000, it was an opportunity to get back in with a really tight stop. But you got again, the doom and gloomers come out. That's it. It's a fraud. It's a bubble. It's going to burst. Crypto's not really the future. And all of that, I don't buy at all. I still am very, very bullish long-term cryptocurrency. I do think that it could have its volatility, its ups and downs. Some of the lofty calls for 146,000, 200,000. It may get there. But at this point, I was looking at 37,000. So it got to 42. It's kind of exactly how we trade. Sometimes I have a target, takes out my target, but I still take my profit, and then it comes down, and I'm like, wow, I'm glad I took some profit. Now I can look with a clearer head. So people should learn a little bit about charting when they want to buy cryptocurrencies because of its volatility. Well, their recent meeting, which was just last week, they talked about basically remaining accommodative, keeping rates low for the foreseeable future. They still feel that the economy is fragile to warrant that. But at the same time, they also said that there may be at some point where they start to reduce the balance sheet, because as you know, that has really grown tremendously over the last couple of years. So yeah, the yields are completely different. And yes, there is a concern. It has to do with the yield curve, but it also has to do with the fact that it got so, again, it's the same thing we were just talking about cryptocurrency. When something gets so extended in one way, when you get these extended moves up or these extended moves down, just think about it. This is how I look at it. I look at this slingshot and I'm anticipating that it's been stretched as far as it can go, and at some point somebody has to let go. Whether people decide to liquidate on the long side or they've been short and they decide to short cover. So that to me is kind of what's happened here with the yields. They've bounced. They're still relatively low when you think about it historically, but the interest rates are really what I've got my eye on right now. And they're still saying they're going to let inflation run hotter than what we anticipate. So I'm not looking at it other than a short-term move right now. No, well, gold is actually kind of lukewarm right now, not really hot. I've actually kind of switched my attention this week to silver, because the silver market came off with the gold market and the gold miner market. But the silver has a couple of other things going for it. First of all, it's not been the subject of these debates, crypto versus gold, and gold is dead and crypto is going to overtake it in terms of cap size, et cetera, et cetera. The silver market has industrial usage, just like steel, just like copper, which we know have gone up. And it's still a good hedge for inflation. So I would say gold, it got through what we talked about. It got through 1850, then it got through 1900, and then it went higher than 1900, stalled, and now it's back down at around 1870. If you look at the silver now, if it can get through $30 an ounce, then I think we can see maybe a move up to $40 or $50 an ounce, particularly if inflation starts running hotter as we get into this year.